On to our top story first. AI is creating a new risk problem for Indian businesses, and now companies are increasingly looking to insure themselves against it. Bengaluru-based insurance platform Plum says queries from businesses exploring coverage for AI-related risks have jumped 45% in the last 6 months. The company says the problem does not only involve cyber attacks, but AI failures inside business operations, including hallucinations, errors, and uncontrolled automation that can impact customer outcomes, business decisions, and even products. The development comes as AI adoption accelerates across Indian enterprises. Now, Plum cites a Deloitte report that shows that 40% of Indian organizations are already running AI at significant or full scale, with adoption concentrated in areas like product development, operations, and customer-facing workflows. Plum has now launched what it calls a full-stack AI risk management and insurance suite, combining advisory, technology, and insurance infrastructure. The platform is designed to help companies identify their AI, cyber, and operational exposure, including structure, insurance coverage, track gaps in compliance, and manage claims and incidents. So joining us today to discuss this and the new suite is Plum's co-founder and CEO, Abhishek Podar. Abhishek, good to have you back with us on South Central. My first question to you. What you're saying is AI-related insurance queries have spiked 45% in 6 months. What exactly are companies asking you to insure now? What is that single biggest AI risk that companies are worried about?
Thank you, Jude, for having me today. Good to be back. Companies are building AI tools, AI agents. They're using AI across all of their daily operations. And with that, it brings new risk, error in what they deliver to their customers, to their clients, IP breaches, downtimes that are very long when something breaks and code has to be fixed. And the single biggest worry is simple. AI makes a mistake, that mistake reaches a customer. Now, companies that are shipping AI inside their own products, when the model gets something wrong, it lands as a professional failure with the client. Beyond that, we're also hearing about IP exposure. We are hearing about extended downtimes when especially AI is driving the operations. And most of the times, the organizations, their leaders are asking about one question, which is, if I have an existing policy, does it even cover all of these different kinds of AI risk? Most of the leaders don't even know that answer, and that is what is creating this uncertainty. That is what is driving this surge in 45% queries that you were talking about.
Right. You know, Abhishek, the fact is that traditional cyber insurance, I would assume, already covers certain technology-related risks. So what is this specific gap that existing policies are actually failing to address when it comes to AI?
No, that's actually generally the very first question that everyone asks, which is the traditional cyber policies. And it does cover when your systems or servers are breached, someone hacks you, someone steals data, deploys ransomware. That part hasn't changed. So cyber insurance answers one question, which is, what if someone breaks into my company? The gap is a different question, which is, what if my AI makes a mistake? If AI is inside the product that you sell and it gives the customer the wrong output, that's not a hack. And your cyber insurance will protect you. It's your product which is not performing as promised, and that sits under a professional indemnity, not a cyber insurance. If AI is drafting your contracts or AI is answering your support tickets, that can become a D&O problem depending on who signed off it. And this is all about AI that you're developing. But a lot of times it may be that it is an issue because of an AI you never chose. Think of AI sitting inside your CRM, AI sitting inside your hiring tool. And if that makes a mistake, it's still your liability. At Plum, we built our AI suite to cover all of these together and not just the cyber piece.
Right. So for the benefit of our viewers, and let's iron this out once and for all, because like you mentioned, there's a lot of technicality and a lot of, if and buts concerning the situation itself. So if any given AI model gives you a wrong answer or makes a wrong decision or causes a customer to suffer a financial loss, to make things absolutely clear, who ultimately bears that liability? Is it the company, the AI developer, or in this case, the insurer? How does that work out?
Yeah, so if a client suffers a financial loss because of an error that happened because of your product or process, the company is legally liable to make that loss good, which means it is eventually the insurance that should cover it. The insurance should pay the claim. And I'll give you a real example. It's a real case study of how this played out. There was this interesting Air Canada case in 2022. It was a chatbot on its website. In 2022, a customer asked the bot about bereavement fares. The chatbot gave him wrong answer. And when this person tried to claim the discount, Air Canada refused, saying, this is an AI problem and not my problem. And when that case went to the court actually gave the ruling in favor of the customer, saying Air Canada is eventually liable for any mistakes that happen on its product or website, irrespective of what model they're using and if it's actually an inherent problem of the model. Which means if you're using AI, the organization that is delivering the product or the process is liable, and hence, if you take the insurance will pay your claim.
But Abhishek, I'm just curious, how do you actually price the AI risk that is at bay and that is presenting itself to you when there is limited historical claim data insofar as AI is concerned? And more importantly, the fact is, what are these parameters that you're dealing with? Because which are these parameters, for instance, that will determine the premium of an AI-heavy business?
No, it's a very valid question, and very frankly, AI is right now, think of this as a chaos tunnel. Insurers are learning as they go, just like everyone else. The core problem, as you said, there is very little historical claims data when it comes to AI-related mistakes and AI-related claims. Underwriting generally works by matching new risk against tons of past claims history. And for AI, this is still new. That history simply doesn't exist yet. So most of the times we ask different questions than we used to. Questions like, is there a human in the loop? Can the AI take autonomous action on its own? What kind of data is the AI touching? Can you pin down which version of the model you're running? And those answers tell us more about the exposure than the revenue or the industry ever did. The premium itself comes down to the end use case of the AI. So if a failure could affect a very large number of people, or the sector itself is very high stakes, think of fintech, think of NBFC, think of hospitals, the premium obviously goes up. So it's the severity of the potential loss that really drives the price. But as I said, this whole underwriting is still evolving as AI industry as whole is evolving.
Abhishek, you've said that you at Plum work with over 1,000 businesses, at least as on date. How many of these companies have actually gone about purchasing or are actively evaluating AI-specific coverage, as opposed to simply making inquiries? What is that at this time in place, and are you converting these inquiries into actual purchases on the ground?
Yeah, we have over 1,000 businesses. Of these, roughly 100 or so organizations that are across different sectors who have already purchased purpose-built insurance cover for covering entire gamut of AI risk. Rest of them are still in the process. They're still evaluating, but we are seeing a very, very high traction, especially from the founders who are thinking of deploying AI models in production. And as they think of this deployment, the biggest thing that comes to their mind is the kind of business risk that is associated with it.
So ultimately, Abhishek, will this end up being a new insurance category, or do you see AI risk, the risk of hallucinations, of fiscal decisions being impacted by way of these hallucinations or AI itself becoming embedded across existing products, which is the way that insurers will go with regard to, launching these new features, either as a completely new category, or do you think it could well be embedded into what already exists in the market?
Honest answer is both. Right now, it's embedded. Today, if you look at it, AI risk lives inside existing products. If your AI makes a wrong call, a customer loses money, that's professional indemnity. If it's a security incident, that's cyber. If it's your board failing to govern AI properly, it goes into D&O. So it's getting embedded into the existing products today. But over time, my sense is that this will become its own category. Insurers will have to rewrite their policy wordings for their emerging risk. And this is true about every major technology shift, right? Every technology shift creates a new trust layer. Internet created cybersecurity. When cloud computing came, it created cloud security. Similarly, as AI evolves, it will create AI risk management and associated AI insurance as a separate product category.
Right. So, Abhishek, then on a lighter note, the next time my AI tool or my chatbot hallucinates, I stand to make a pretty hefty insurance payout, you reckon, right?
Yeah, I hope it doesn't make a mistake in the first place.
Let's hope, and that's something that we can all, work with and hope for, at least, from the start of us using AI in our day-to-day lives. But on that note, Abhishek, Podar, AI-led insurance, that's what new age insurance is all about, and that's what Plum is doing, at least at this time and place. On that note, thank you so very much for joining us on South Central and breaking down some of these insights across what could well turn out to be a brand new insurance category. Thank you so much for joining us on South Central today. And staying with more news from the insurance space, Andhra Pradesh has recorded a 70% surge in crop insurance coverage in just 10 days, with farmers covered under the PM FBV rising from 4.13 lakh rupees to 4.13 lakh farmers to about 7.0 lakh farmers. The total insured crop value has also jumped to around 6,820 crore rupees. Now, across the Pradhan Mantri Fasal Bima Yojana and the weather-based insurance scheme, nearly 11.4 lakh farmers are now covered, with the combined insured area at about 12.61 lakh hectares. The enrollment deadline, remember, has been extended till the 15th of August. On to some political action next. Tamil Nadu Assembly Speaker JCD Prabhakar has sparked a political row after participating in an anti-abortion rally organized by Catholic groups in Chennai. Now, speaking at the event, Prabhakar said, and I quote, "Life begins at conception," end quote, even going on to argue that there is no existing right to abortion, adding, and I quote again, "Every child is a gift from God," end quote. Now, these remarks by the Tamil Nadu speaker have drawn criticism, particularly because Prabhakar, remember, is a constitutional office holder. In fact, the controversy has become so prominent that it has also prompted Tamil Nadu Health Minister KG Arun Raj to clarify that abortion is in fact regulated by the MTP Act and can be a medical necessity. And staying with more action from Tamil Nadu, the State Assembly has once again moved to scrap NEET for undergraduate medical admissions, urging the centre to allow admissions based on Class 12 marks. Now, the resolution was backed by the DMK, the AIADMK, the PMK and left parties, while the BJP's lone MLA opposed it and walked out. Now, this puts the spotlight back on Tamil Nadu's long-running battle against the National Medical Entrance Test, with the state arguing that NEET disadvantages rural and underprivileged students. The test has received renewed focus in the state after the recently concluded Jantar Mantar protests in New Delhi over the NEET exam paper leaks.
Well, we saw fiery debates between members of various political parties today in the State Assembly. Two important resolutions were tabled in the Assembly today. The first resolution was against the NEET examination, which was tabled by Health Minister KG Arun Raj. So this resolution was not to demand an exemption from the NEET examination for Tamil Nadu. It was in fact demanding a ban on NEET examination all over the country. So basically, there is no need for a NEET examination. Medical admissions should happen only based on Class 12 marks is what this resolution was in fact stating. And except for the BJP, all other political parties in the Assembly, including the DMK and the ADMK, they supported this resolution, and it was passed unanimously in the State Assembly as the BJP member walked out. The sole BJP MLA Bojarajan walked out. As far as the second resolution is concerned, it is about the FCRA Bill 2026 that is currently a huge discussion topic here in the country. So Minister Raj Mohan tabled this resolution, and this resolution urges the Union government to withdraw the FCRA Bill 2026 in its present form, because the GPK government here feels that the proposed amendments at the moment it feels disadvantageous towards minorities and genuine institutions, welfare institutions that are indulged in welfare works. So certain modifications need to be made, and in its present form, this bill should not be passed in the parliament is what this resolution is telling. And again, except for the BJP, all other political parties, in fact, supported this resolution, and the ADMK, they maintained a neutral stand. The ADMK neither supported this resolution nor opposed it. They maintained a neutral stand, and the BJP have vehemently opposed it, I know here. But still, with the support of the majority members, this resolution also was passed in the State Assembly today.
Well, Dharni, they're wrapping up all the legislative action from Tamil Nadu Assembly, both on NEET as well as the FCRA. But moving on to Telangana next, the state's voter rolls could see a major shake-up with 73.53 lakh voters at risk of deletion after the SIR enumeration deadline has ended. Now, the state has 3.38 crore registered voters, but forms were submitted only for about 2.65 crore. In fact, Hyderabad is the biggest concern. Of the 47.37 lakh voters, forms for just 27.89 lakh have been digitized, which means that nearly 19.47 lakh voters in the city of Hyderabad are at risk of being left out, with the city also recording the state's lowest digitization rate at just about 58.89%. On to another story we've been tracking for days, if not weeks now. There may be some light at the end of the tunnel over the acrimonious equation between restaurants and food delivery platforms in Bengaluru. ET now has learnt that a significant degree of headway has been made in discussions between the Bengaluru chapter of the National Restaurant Association of India and Swiggy. Remember, restaurants in Bengaluru were threatening to stop accepting orders on these apps like Swiggy and Zomato over issues ranging from non-consensual discounting and sky-high commissions. ET Now was also the first to break the news that right here on South Central, in fact, that the Restaurant Association had consented to move its August 15th deadline to the 1st of September. This after talks with Zomato last week yielded some positive results. We're now hearing that there's perhaps more good news from similar talks that were held with Swiggy last Friday. To get us some of these details, I'm now joined by the man of the moment, Bengaluru head of the National Restaurant Association of India, Anant Narayan. Anant, good to have you back with us on South Central. You probably already preempted my first question to you, Anant. How did those talks with Swiggy go last Friday that you were talking to me about? Can we conclusively say that the situation between restaurants in Bengaluru and the food delivery apps are a tad better than what it used to be?
Firstly, nice to be back here with wonderful host, you hosting the show. I think you guys should be called ET first now. Anything coming first, you break it first. Good job. Now, coming to the question back, yes, there is a good respite. Like I said, the ecosystem should go hand in hand. Thankfully, August 15th will be Independence Day and Happiness Day, not a jihad. The deadline has been pushed to
Back on track.
September 1st. There's been very good response by Swiggy CEO, Zomato CEO. The teams have been wonderful in listening to many of us. They've assured us that most of the problems would be solved. They've taken a little extended deadline. I think more or less this should close the bone of contention issues between us, and I think it should usher a new era of togetherness and ecosystem growth now.
Right. You know, Anand, that's extremely encouraging. That's extremely encouraging right now. But I have to ask you, those two big issues, Anand. One is those non-consensual discounts that restaurants have had the problem with for the longest time, as well as sky-high commissions. Have they been ironed out, these outstanding issues, as far as the food delivery apps are concerned? Have you gotten over that hill?
Bang on questions like the previous time. Both are the most burning issues, rightly told by you. See, the discounted one is a lot of error happening in the system, error happening by the people in the system. I don't know deliberately or why it's happening. It's happened. So they have come up with a OTP-based discount system where without the OTP, discounts would not be coming onto restaurants. More or less, if this is looked into, worked on, then I think the problem solved. The second question of high commission. To be honest, see, every business has their own way of working. Rapido only works on zero commission. Flipkart is working on 11% commission. To be we being the other side, we don't know what is the expense of Zomato, what is the expense of Swiggy. It's their prerogative. If it works, be on board. If it doesn't work, don't be on board. Where we are questioning them is when you talk about 25% discount, don't deduct 45% discount. When you're talking about 26% discount, don't talk about deducting 66% discount. This again, they've come up with the OTP format and an agreement where it will be signed in regional language. Believe me, most of Indian restaurants, they are in vernacular language. They like to converse in vernacular language.
Right.
22, 23
Right.
local
Right.
languages. So they get mistaken when the agreement term is in English and they sign something which they cut a sorry figure later. So these have been addressed quite well.
Right. So if I'm hearing this right, Anand, what you are saying is that a discount or a commission can only happen when both parties are on board with regard to what that number is. Is that how it will be on a case-to-case basis going forward with regard to individual restaurants and these apps?
Absolutely. Rightly said, it will be case to case and it will depend on what a restaurant owner wants. It will depend on what a restaurant doesn't want. These mistakes
Right.
which were
And
happening earlier would be with the consent on OTP and an agreement with their language, what they can understand, where they can either sign or
Right.
decide not to sign.
Right. And I've also been reading, and again, you can correct me if I'm wrong, that the smaller restaurants, the Darshanis, they've been asking for a smaller commission to be taken, by these apps, given that margins are already wafer thin as far as these smaller restaurants are concerned. What have the apps had to say with regard to that specific request?
See, as NRA chapter head, as somebody who's united 7 restaurants and taken lakhs of restaurateurs to Swiggy,
Last
Zomato,
question.
my heart and soul is for definitely restaurateurs. He should make the maximum. Having said that, we are nobody to question somebody on their percentage of what they charge. Of course, we have asked for almost 7 to 8% lesser than what they are actually charging now. But it's their baby,
Right.
it's their name. We cannot name their baby.
Right.
At the most, we
Absolutely.
can
I
have
completely get
parallel.
that.
Yeah, at the most, we can have different platforms, different aggregators giving you better service or rather better percentage, which as an association,
Right.
heart and soul, we're working towards that.
Right. In fact, yes, the last time we spoke, you did talk about the need to end the duopoly and bring in more players. Last question before I let you go. There are a few days to go before that food delivery summit is being conducted in Gujarat. Can we expect a more pan-India policy or a more pan-India approach to dealing with food delivery and the business of sustainable, equitable, acceptable food delivery, going by the Bengaluru example that you've helped craft? Can this be seen as a nationwide policy wherein restaurants end up with such agreements with platforms across the board with regard to making it on a case-by-case consensual discount model? And can the summit pave the way for that, Anand?
Bang on. If we dug gold here in Bangalore, it will be Sonepe, Suhaga, and Ahmedabad. I promise you that. Whatever we are doing it as an experiment in Bangalore, we definitely want this to be deployed in other parts of the country. Of course, Swiggy, Zomato are putting in their might to do good to the ecosystem.
Right.
And I'm, like you rightly said, 20th will be a bigger news. And for sure, good news for the
Absolutely.
country from Zomato and Swiggy.
Well, lots to look forward to then, Anand. Thank you so much for joining us in South Central and breaking down these details and briefing us on some of the big takeaways of those twin meetings. Thanks again for joining us on the show
Thank
today.
you so much. You guys are wonderful, wonderful channel, wonderful host. Pleasure to be on your channel.
Thank you very much, Anand.
Bye-bye.
Moving on, US Ambassador to India Sergio Gore has highlighted Karnataka's growing importance in the India-US economic relationship, saying more than 1,000 American companies now operate in the state. Speaking in Bengaluru, Gore pointed to the strength of the state's technology and innovation ecosystem. He also said that India-US bilateral trade has crossed $240 billion, underlining the scale of the economic partnership. Here's what the US Ambassador said.
Whether that's defense sales, you name it, energy, a massive increase in energy from the last year. We're at 30% growth from the last year alone. The United States and India have limitless potential. That limitless potential goes through Karnataka. I'm thrilled to be here. I congratulate all of you for everything you have done, you continue to do. Our consulate in Chennai is open to you. Our embassy in Delhi is always open to you. And whatever we can do to work together with you and take this relationship to the next level, you'll find an open and willing partner in us.
Right. Meanwhile, Kerala Chief Minister V.D. Satheesan has promised new SOPs for coastal safety and rescue operations. Now, the announcement from the Chief Minister comes even as 3 fisherfolk have been missing for 11 days now after separate boat accidents off Kerala's Thiruvananthapuram and Kollam coastlines on the 31st of July. In fact, the incidents led to the families and the fishing communities protesting, alleging delays and lapses in rescue efforts. This even as the Navy and other agencies are continuing search and rescue operations. And before we end, here's a heartwarming video of Tamil Nadu Chief Minister Joseph Vijay at a drug awareness event in Chennai. At a felicitation along the sidelines of that event, the Chief Minister met a rather young cop. In fact, that's the son of Ramnathan Superintendent of Police Chandish, arriving in a police uniform and winning some fanfare from none other than the Chief Minister himself, who carried him for a photo op before giving the child a mock salute. Well, that certainly made that kid's day. But with that, it's a wrap on South Central today. Thanks so much for watching. We'll be back tomorrow, same time, same place, with more news and updates from South India. But for the moment, it's goodbye from us.